All right, so it is May 26, 2024, 1:53 p.m. Um, looking at and looking to analyze um, UJ, US dollar, Japanese yen. Um, looking to give a little bit of context and a couple of things we've been looking at lately, um, and share some possibly new things um, that I was seeing as I was doing some additional analysis. So with that being said, I'm currently sharing, uh, there we go. Okay. So currently sharing 15-minute chart. So one of the new things that I added here is so this one is the volume candles. Um, So I put this volume candle indicator on here, and I'll get into the um, details of that. Then I also have the price action volumetric order blocks by Stratified Trade. Again, the price action volumetric order blocks by Stratified Trade. It's pretty much an exact duplicate of the order block, the volumetric order blocks from Lux Algo. But this is a free indicator versus the paid version from Lux Algo, which is included in their price action concepts indicators or suite, which you have to pay for. So I was able to find a free version, and with this version, the only tweak that I did was I went in and the construction of the order block, I made it based off of the full candle. So you can do length, which is part of the just partial candle, or you can do full. I chose to do full because typically the order blocks or the orders from the order block are placed in that entire candle. So I wanted to capture that, and you'll see where that will help us out with our analysis here in a second. I left everything else the same. You can look at alerts and stuff. Maybe we'll do that in another video or an update or something like that. But that's the Stratified Trade Price Action Volumetric Order Block Indicator. Free. All right. And then, like I said, the volume candles, I didn't change anything in the volume candles. So I wanted to see if the volume candles could give us a quick visual as far as the volume in the candle that could lead to a turn in the market, whether it be the continuation from a pullback or a reversal type of setup or something like that. And it kind of does, you kind of got to watch it to see what that looks like. So as you can see here, this candle right here, we had a bit of a rejection or what have you. And then red indicates bearish volume, order flow, or whatever you want to call it. So we're just going to say, we're going to call it what it is, bearish volume. The dark gray also indicates bearish volume. So when you get the bright red and the dark gray, those are the candles or the representations of bearish volume. When you get the green, the like highlighted green and the somewhat white candles, those indicate bullish volume within those candles. I did take and look at what that looked like within the footprint chart, and we'll look at it visually here in a second. But what I wanted to show you, so remember what I mentioned not too long ago, the creation of the order block, right? So this order block was created from this candle. So this bearish candle. Now, when you look at the volumetrics in the candle, right, you see that there was more bearish volume than bullish volume, right? So more sales or more orders hit the sell side of this candle of the volume than buys, right? So for all intents and purposes, this is a bearish order block indicated by the color, right? By the color, because there was more bearish volume than bullish volume in this candle. Again, the reason why I set the settings to capture the entire candle, to again capture all of that volume, right? So I'm going to show you how this volume correlates to the volume in the footprint. So now the volume you see here is the total volume, both buy and sell, that went into the creation of this order block and this candle right here, right? So you see how the volume metric says 5.812K. Let's look at that same candle on the footprint chart. So this is the 10 o'clock in the morning candle on Friday. So we'll go back, take a look at that. So 5.812 is what we see. So here's that candle. Here's that candle. And as you can see, the total volume was 5.812. So they match. That matches. The volumetric order block matches the total volume in that candle. Now, when we look at the actual footprint, we see where, again, within this candle, majority of the volume was sell volume. We see where that sell volume was. We also see where the buy volume was. Not a lot of buy volume, but a whole lot of sell volume, right? So the other thing to look at, so you look at total sell volume versus total buy volume, but we don't need to look at that because we got the delta. So we see the delta in this candle was bearish delta, so negative 316. So we had negative 316 bearish delta within this candle. So a legit order block, legit candle, bearish, for a downside move, right? All right. So now that we see that, let's go back over, look at our analysis real quick. All right. So we see here we got this highlight kind of yellow greenish volumetric candle right here. So that tells us that apparently there was more buy volume within this candle. So let's take a look. So that is the 1015 candle. So let's take a look and see what that looks like. And we see, yes. So now here's the thing though. So when we look at this candle right here, we see that yes, it was bullish in nature. There was quite a bit of bullish, quite a bit of buying, in this candle. But the buying was at specific levels, which was lower, but below the point of control. So remember this white area right here is the point of control within this candle, right? So we see that the point of control was one negative delta, and then everything above it was negative delta. So what that typically means, look, not 100% right, but what that typically means is that the buyers are not really interested in higher levels, typically, right? Not so interested in these higher levels. It's not in this candle anyway. So if we were to get, more movement up, which you'll see in the next candle, right? It more than likely will be short-lived. It could be, a number of reasons why, the market will move up a little bit, off a low buying volume, right? So again, looking at where the point of control, understanding where the volume is, on the footprint and in this candle gives us a bit of context as to where the market truly wants to go, right? And we see that again, we still had negative delta. We still had negative delta. And if you look, another thing to pay attention to is if you look at the total buy volume in this candle was 2.7. You look at the total buy volume in this candle, 1.8. So what that tells us right off the bat is that one, the volume overall is decreasing. Two, the buy volume is decreasing, right? So again, not a whole lot of interest, for the most part in kind of pushing the market up, right? So again, another way of reading that candle. So again, but don't be misled by again, the volume candle basically telling you that, or showing that this was a bearish candle, because in all actuality, it was not a bearish candle. It was actually, we had bullish delta. Now, a large portion of this candle was actually bullish and to the buy side, right? As as far as area is concerned, right? But overall volume though was bullish. There was negative 81 or 81 more sell orders within this candle at strategic areas than there was buy volume overall in this candle. So that's probably why the candle printed on the volume candle basis, why it probably printed as a bullish candle, but in all actuality, it was not a bullish candle. We had more bearish volume, right? And that's just indicative of the fact that it closed higher than the previous candle. So that's why you'll get a green candle here, because these candles deal with the spread. So how far price moves up or down, right? So if price closes above the closing price of the previous candle, then it's going to print green. If it closes below, right? So this candle closed right here, and then this candle opened right here. It pushed up a little bit, but it closed below the close of this candle. So then it's going to print red. And then if you look here, right, this candle actually closed above the close slightly, ever so slightly, right? A little bit above the close of the previous candle, so it's going to print green, right? Again, so anyway, just a way to look at that and read that a little bit, or what have you. Now you see in this candle, right? Interestingly enough, this is a doji candle, right? And we see that the market is moving down. Look at where the volume is though in this doji candle, right? So pretty much trapped in between, right? We have the buy volume, which is trapped in between sell volume. So we got sell volume to the top of the doji, sell volume to the bottom of the doji, and the buy volume is trapped in between. Very interesting, right? So in most cases, again, seeing that the move, where the momentum has been moving downward, and we have sell volume at the top and the bottom of this doji, that's a good indicator that we're going to continue to the downside, which is exactly what we end up seeing here, right? We see that this candle closes right around here. We see that it moves up just a little bit, grabs a little bit of that buy liquidity that's in there to go ahead and take and push the market down even further, right? So typically what's happening is orders are being stacked when you see indecision, right? Or what have you. So this was basically a setup to continue moving the market down. So needed some buy orders and strategically place some sell orders in order to move the market down in the desired direction of those that control the market. So again, we analyze the market to be able to follow those that control the market. That's your job as a retail trader. Analyze the market, find out where those that control the market are looking to move the market, and you ride their coattails. That's how you should be doing that. All right, so on to the analysis. So we see that this order block was created. Remember, the rule of thumb for getting into trades is going to be first and foremost, you have to know what's going on a higher time frame. You have to get the higher time frame bias. So we're going to look at the 4 hour first, and then we'll look at the 4 hour, and then we'll look at the 1 hour for more of our intraday play. Okay, so 4 hour chart. Let's get that higher time frame bias. All right, so we're going to look at this real quick to make sure we understand the direction of the market, or possible direction of the market, right? So as we look at this, we created a high right here. So a higher low, and this higher low did put in a high, right? So we have bullish volume going up. But as you can see, buyers, we started having what is considered passive buyers as this market moved up, not necessarily aggressive buyers. So when you see more volume, more buy volume than sell volume, those are aggressive buyers. So this this order block right here was a result of aggressive buyers coming in and putting in big volume to push the market up, right? But then when the market got here, the buyers weren't so aggressive. They were more like passive buyers. So meaning that these were people who probably had limit orders and stuff placed here from previous move or what have you, right? They probably had limit orders and that allowed, to move the market up. But the volume wasn't as high as the two previous order blocks, right? So these order blocks right here are indicative of high volume coming into the market, buy volume coming into the market and pushing the market up, right? So these are aggressive buyers, passive buyers. And the reason we know that they're passive buyers because the market continued to push up, right? And the same thing happened in the next little order block situation here. We had more sales than buys. So we had some passive buyers sitting at this level as well to continue to push the market up. Right now, here it was kind of the opposite. We had more buyers at this level and then we started consolidating. Right, the market didn't necessarily go up anymore, but you have more buyers, especially right now. But the market didn't really push up. So what we're starting to see on this 4-hour chart is we're starting to see a consolidation. So out of a consolidation, the market can continue to push up, or we start getting into reversal territory. And if we look at the footprint, we will see that we're probably starting to have more bearish volume come in and they're setting those orders. So remember when we started to consolidate, that's those that move the market are starting to stack their orders to make the next move, right? So let's take and see what that looks like on the footprint chart. So we're going to open the footprint chart. We're going to put it on the 4-hour. And we're going to look at that same situation on the 4-hour chart. We're going to look at this same situation. And we're going to get an idea of what's going on. All right, so we're going to open this up so we can see that volume in there. All right, there we go. All right, so looking at that same information, right? So we see this is the consolidation that we were seeing, right? These are those candles that are starting to consolidate. Notice what you're seeing, right? So here, this was the last kind of bullish candle before the market started consolidating, right? It kind of broke out a little bit from a tiny little range or consolidation right there. All right, we made that new high, right? And we see we got some bullish volume just above that candle, right? So those could be stop losses or breakout traders that's trapped at that level right now because the market didn't continue to push up. It actually rejected, and we started going into consolidation. But notice something, right? In this point of control, we have positive delta, right? Then as we go across, right, I want you to see something. We got negative delta, positive delta. This is now, keep in mind, this is the same price area, right? As we go across, we're looking at the same exact price area, right? So when we came up this bullish candle, right, it was positive delta. Then we started getting some negative delta at that same level, right? Then a little bit positive delta. Then we got quite a bit more negative delta at that same price level. Then we got even more, almost double the negative delta. Then we really double. So now we're starting to get a picture of negative delta now at this price level, right? At this price area, right? Now we see where the market pushed up a little bit, past that level and everything. And we see where, it kind of went back and forth. But now we're seeing that pretty much the market has now kind of settled on negative delta at this price level. So there's a lot more selling going on at this price level now than buying. So it'll be interesting to see if price goes above this level and closes. Notice every candle that's pushed up a little bit, but no close, none closed. They all came back into this area, right, of consolidation. Now, the last candle, last 4-hour candle we had on Friday, right, that 1 o'clock candle, right, all negative delta in that entire candle. It didn't even push up or what have you. So again, with the footprint chart, we get to see the actual activity and volume that's going on, within each of these candles. Remember, this is the 4-hour candle, so obviously the volume is going to be quite a bit more than you'll see on a 1 hour or 15-minute, right? But again, getting a higher time frame bias. Now, this doesn't mean, because here's the deal. We have not turned back bearish just yet on this chart. Now, many would say, so this could be a possible liquidity grab on the 4-hour chart. Let's take a look at the daily and see what the daily is talking about. All right, so I'm not going to just take the word of the 4-hour chart alone. I want to look at the daily. I want to see what the daily is telling me. All right. So yeah, so the daily pretty much coincides with what we're seeing. Yep. So if we look at this daily chart here, right, we pushed up. Then, of course, Friday was some consolidation, right? We have not created a new high. We're starting to get more rejection. We got rejection on Thursday, and it looked like Friday we started to get some more rejection. Here's why. We are in a daily order block area right now. Look at this. We got an order block within an order block, which is interesting. Look at this volume right here. Look at this volume out of this order block right here. Right. So you have this order block right here, which obviously has not been mitigated by any means. And we see that within this order block, so the volume there's more bearish volume in this order block anyway. So we know that, right? But what we also see is that, price is starting to halt, in this area. Price is starting to halt in this area, in this order block. And it's indicative of what we're possibly seeing on the 4-hour. So for the most part, we could be starting to go into bearish territory, just looking at the higher time frames, right? We could be starting to go into bearish territory. We don't know just yet because, we haven't gotten a close, we haven't broke this higher low yet. So we won't really know until we break, this higher low right here to the downside. If we're really going into bearish territory or not. So still bullish until we get that side, but indications are pointing to possible sell side, downside pressure coming into the market to push the market down. But it's actually still bullish overall. The sentiment has still remained bullish. So there hasn't quite been a mindset shift on UJ to go to the downside, which means the dollar still remains significantly more stronger than the Japanese yen, which means you should be possibly looking to buy. But again, looking at indications for, which way the market is going. So we'll look and we'll continue to get our daily bias, right? Again, so if we're looking at, if we're looking to get daily bias, we can see here that we're coming off of a bit of a doji, and then the market, it did not create a new high. So I'd be interested to see what the next daily candle is going to be. Be interested to see what the next daily candle is going to be. It's a good chance that, it could, be a bearish candle, but we'll see. Or it could still close, within the range of this candle here, right? So that's the high, that's the low. So price needs to break the low really for me to be bearish on it. It needs to, at the very least, break the low. We didn't create a new high, which is a good sign, but I needed to now break this low with at least wicket or give me a close below that low for me to then look to start taking sales. So we'll look at this from a daily standpoint. I want to see where the next candle closes in relation to this candle right here, right? Both candles. Want to see if we get a lower close, but more so this candle. We didn't create a new high, so that's a good sign for bearish pressure anyway. In any case, and then we can see again. Let's take a look and see what the volume is looking like from a daily perspective. That can add a little bit of context to this whole thing as well. Okay, so it kind of stands out right off the back. We can see that we have pretty much all negative delta. I mean, not pretty much, but all negative delta within this candle. So that previous daily candle, so that Friday candle was very much on the bearish side for the most part. And it looks like we had about 5.8K delta, bearish delta, negative delta in this candle. So again, it'll be interesting to see where the next candle falls, right? So we know that this wick, right, pretty much ate up all this 3.5K orders that was there. And then same thing here. So we ended up with, and we already know at this level, we're rocking negative 547 delta already. And that's, again, then coming off of 5.12K negative delta. So when we get down here, we're looking at negative delta already. So your high delta points are already starting to be mitigated, and those orders have already been triggered and filled, right? So negative delta. So let's see what the next candle is going to be, and we can start to formulate our trade setup. Again, possible reversal in the future for UJ overall, but still in a bullish overall mindset. So we're waiting to see that market structure shift. One thing to note, a good quote that I remember reading in a book, that the market does not reverse quickly. The market takes its time to reverse. And the reason for that is because orders have to be strategically placed in order to strategically move the market in the direction of those that control the market. That's why that is. All right, so we'll take it back down to the 15-minute on both sides. And I believe that's going to take us to the end of our analysis on UJ for the day and give us an idea of our trade setups, possible trade setups for the coming week. So happy trading and good luck.